Welcome back. Now, amidst global economic uncertainties, value investors continue to navigate through low expectations, anticipating a turnaround in returns on the JSE. These challenges persist in the SA equities market, prompting further withdrawals. And joining me now for greater perspective on this is John Biccard, a portfolio manager at 91 Value Fund. Thank you so much for your time, John. Of course, the South African market is not operating under perfect macroeconomic conditions, but can a value investors actually thrive in these conditions?
Yes, so the South African equity market has basically been a disaster for the last 10 years. If you look at SA equities, they've underperformed the S&P 500 in dollar terms by 10% per annum for the last 10 years, which is an enormous underperformance. And that is when we as value investors get interested, because we think the setup for South African equities from this point is very good. And that's because the valuation is now at an all-time low. It is an all-time low relative to other emerging markets, an all-time low relative to the developed world. And in absolute terms, it's close to an all-time low. So you can go and buy good quality South African shares on 8 or 9 times earnings with 6% dividend yields, which are very attractive. And for us as value investors, the most important thing is valuation. And what happens in the future is more important compared to the valuation of the price you pay. So why has it gone so wrong the last 10 years? Well, it's really gone wrong in the last 6 years. And if you go back, the history of the last 6 years has just been a litany of woes for South Africa. First of all, we had the disappointments when President Ramaphosa came in. There were lots of hopes of structural changes, which didn't happen. And then we had COVID, and then we had load shedding. And now we've got worries about the election and any alliance between the EFF and the ANC. And as a result of that, these valuations have come about. So if you look at something like ABSA, which is a real typical South African share, 6 years ago when we had what we called in the market Ramaphoria, when everyone was very enthusiastic about South African shares, ABSA traded at 200 Rand, and if you can believe it, the Rand was 12 to the dollar.
Wow.
So you paid roughly $16 for an ABSA share. Today, the share's 150 and the Rand's 18 to the dollar, so you pay $8. So in 6 years, you've halved your money in dollar terms. And basically, 6 years ago, you paid 12 times earnings for ABSA, and today you pay 6 times.
Yeah.
So the valuation is rock bottom. And then the other important thing that comes out is the positioning. So positioning is who's buying and selling the shares. So the valuation is basically a 10 out of 10, and the positioning is 9 out of 10, because we've had, in the last 5, 6, 7 years, we've just had selling from South Africans and from foreigners, and which is a very unusual thing, because generally South Africans sell to foreigners and foreigners buy from South Africans.
Yeah.
Foreigners have sold 700 billion rands worth of South African equities because of all that bad news I've said. And South Africans, 2.5 years ago, the Treasury enabled the average balance fund to take money out up to 45% of the fund. And as a result, South African average pension fund now has over 40% offshore and under 40% in South African equities. And if you go back 20 years ago, it used to be 70% South African equities and 10 or 15% foreign.
Yeah, very
so
interesting.
We've had local selling and foreign selling.
Yeah, very, very interesting numbers there. And of course, I want to zoom into investing around elections. You did mention that as a risk event. Every company that is coming out with earnings is saying that they are watching out for that event. Of course, the JSE's liquidity hasn't been a lot this year. Of course, one of the reasons being cited is the risk around election and that outcome. Just talk to us about how much risk has been priced into the markets, but also if investors should be planning around certain scenarios.
So, all those other bad news things got the valuation low, and then the election on top of it is another risk event. And so people generally like to say, we like to see how it goes in the election before we commit. And, obviously that would be very nice, but that's not the way that markets work, because once you know the result of the election, be it good or be it bad, the market will immediately price that in. So that is not really a tactic that is going to work. Unfortunately, if you want to make money, you have to take some risk. And so you have to have some view on the election. So our simple view on the election is, if I look at the valuations, the market is expecting a bad outcome from the election. That there's a high probability the ANC gets a very low number and a high probability that they then make an alliance with someone like the EFF.
Well, John, I mean, these valuations are quite depressed. And I mean, as an investor, you want a return for your investment. Those stock prices are depressed, but also a lot of the company results that are coming out are not shooting out the lights. So does value investing right now require some patience?
Yes. So the most important thing is the starting point evaluation for us. But you need to point, so then you need a catalyst. And the catalyst is reduced load shedding, which we think we're well on track for, and you're seeing it in the last 6 months, and that is a massive thing. So you've got very low valuations. You've had the SA economy has basically been murdered for 2 years because of load shedding, and we estimate as much as 4% of GDP has been taken off because of load shedding. So load shedding gets better, and suddenly the economy grows at 2 or 3%. That's a massive thing. So, then obviously the companies on the JSE have spent a lot of money on diesel, on keeping the lights on. Suddenly the diesel costs disappear. The economy starts growing at 2 or 3%. You can get some very, very strong earnings growth out of these 8 or 9p companies. And so the real thing is you buy when it's depressed and you wait for something good to happen. And there are definite signs in the South African economy that, things are a long way from perfect, but they're getting less bad. And that is a very powerful thing in equity markets.
All right. Well, we do have to wrap up the conversation, John, but thank you so much for just giving us some of the key factors and key ways in which we can navigate the stock market around this time with election risk around the corner, and maybe with investors positioning themselves before that election outcome. That was Portfolio Manager at 91 Value Fund, John Biccard.